want to just address what Deputy Stanley had mentioned there about the 100% mortgages. And I know Mark and Conor mentioned it as well. And you were mentioning about the lower loan to value for the banks, so they're in a much safer position. But I'm just wondering, with starter homes in Dublin around 400,000 to 500,000, nearly 500,000, how come the 100%, the 110% mortgages, which were a disaster in Ireland, how come they work really well in the likes of Germany, and they've been reintroduced recently in the UK? Yet, how come we can't make? Is it the Irish psyche, or is it our banking system?
I think if you're comparing countries, you need to look at the overall framework for mortgage measures, and different countries have different measures in place. What we know is, over recent years, we introduced our measures in 2015. Since then, most EU countries have introduced some form of mortgage measures, whether loan to income or loan to value. In other countries, there are restrictions upon what they can introduce. So systems differ across countries. All countries, most countries now have something in place. Many have these type of loan to value, because the evidence clearly suggests, cross-country evidence, historical evidence suggests that 100% mortgage are risky loans for the reasons I outlined earlier. So in terms of comparing Ireland to Germany, you'd need to compare the overall system, but we will be very confident that 100% mortgages are overly risky, both from the perspective of the borrower and the perspective of the bank.
Were you surprised recently that the UK reintroduced them only in the last month?
The UK restrictions mainly relate to loan to income. In fact, our own evidence suggests that the loan to income is the more binding condition for borrowers. For most borrowers who are unable to get a loan, it is the multiple of their income that is the binding factor. Hence, we introduced some changes to that. We have a 90% loan to value, therefore a 10% deposit. That is a relatively moderate restriction. In other countries, it can be 15, 20%. In fact, here in Ireland ourselves, we previously had a higher loan to value of 80%. We think 90% is a prudent level, and we think that the issue for first-time borrowers does not relate so much to that as it relates to the high house prices and the shortage of supply in the market.
Okay, thank you. Another hat that I wear is I'm chair of the Bluebell Community Council, and we're doing a large housing project in Bluebell with the Land Development Agency and DCC. But what we're finding is it's an affordable housing and social housing project. What we're finding through our research with the community is that affordable housing is not very affordable. And I'm just wondering, what role does the central bank play in promoting affordable housing solutions, and while at the same time maintaining the financial stability that the banking stability you're talking about?
Yeah, I can certainly start. So directly with the mix of housing and how it's chosen to deliver, central bank actually plays very little role, right? It is across. Our view of it is really in two elements. One is the lending, which has been made safe in terms of its resilience to the banking sector, but also, and to touch on some of this 100% loan piece, it's also in the interest of the borrower, right? It's not as if, you know, these rules are created in such a way to harm the borrower. We have a long experience in Ireland that maybe other jurisdictions don't have, that if we do have the large unemployment shock we talked about, and we have the 2011, people need to have an option set then. They need to be able to resolve these loans. When they go in with very high LTVs, it really restricts the level of options facing that borrower to remove themselves from that position if they are unfortunate and their employment doesn't progress as they expected. So whether it is across any of the products that the financial system would help support in terms of mortgage financing, it really doesn't come down to that mix. The affordability, and that is really much more on the supply side, where we want a different mix so different households can access housing across the income distribution. It's not necessarily for the central bank to disaggregate between each of those in terms of like supporting them differently. It is about ensuring for all customers that their lending is done in a safe and sustainable way.
Okay, and just regarding lending to small builders, it looks like smaller builders with 50 to 60 houses, they're struggling to get finance. And I'm just wondering, what role does the central bank play in that? And can changes be considered across the banking sector to address this?
So I can start, or I can certainly start. So in essence, if you think about any of these decisions which are to individual construction firms, are commercial decisions. But when you think about, if you look at the landscape, I'm very happy to comment on how we see the landscape in the financial system. There's a couple of elements to it. So one, we do see the commercial, let's say the pillar banks, or we call them traditional retail banks, they have actually started to introduce more products where they are the debt side of something which is equity financed. They've advertised some of these, so small builders can engage with them. They will help them find some of the equity we talked about earlier, and they will match them to loans and provide some of the loan financing. That's one. We've the non-banking sector. We've recently put out new data in our frontier statistics showing the non-bank sector has a bigger, larger and larger presence in terms of supporting these smaller builders. They can view it and have more individual relationships, if you like, and can back certain products. So that's one of them. And thirdly, we talked about this earlier, there is the state banking, where, you know, they particularly target both in terms through some of the ISA funds to the equity channel, but also in terms of some of the debt lending. So there are a number of avenues within the financial system to support builders. Now, of course, we can still go further, and maybe we even need to think on the builder side. We talk a lot in the opening statements, and I think across both of them, in terms of scale, in terms of, you know, there are impediments to being, you know, having this fragmented, small construction sector. Bringing some of that together would remove some of these barriers to finance, because they would be able to access it on a much more wider scale and put forward more projects and a portfolio of projects. So I think there's elements on both sides, but the central bank itself doesn't necessarily oversee how the credit gets allocated to each of those sectors. I don't know if you know.
And it seems to mostly affect the development of apartments, because you have to build the whole apartment. You can't just sell one apartment. You have to build the whole block.
It's certainly the case that developing finance for apartments is a different feature, right? Because you can't. The typical housing estate, you can build 10, 20 units, recycle the finance. The recycling rate in apartments is much lower. It could be gone a year, 2 years, depending on the size of the scheme. That's how we did see more institutional investment support the construction of apartment blocks across Dublin.
Thanks a lot.
Thanks, Senator.